So we are in an era where forex trading has gone mainstream. Everybody wants to get involved with forex trading. We're seeing the lifestyle, we're seeing the money, and you're all getting motivated. In as much as you want to get involved with trading, it is important that you know that there are hazards attached to trading and you ensure that you get properly informed. Trading is an industry where if you do things the wrong way, you lose a lot of money, you can get into debt, you could ruin your life entirely. And it's also an industry where if you do it right, you know what can happen. It just depends on you. But now in this video, I've got you covered. So you don't have to hurt yourself in the process of trying to get rich. In this video, I'm going to walk you through everything you need to know with regards to getting started with trading, from what forex is, the basics of forex, down to placing your first trade. But let's not talk too much, let's not preempt the things, let's just get started. It's important to inform you that this video might be long, and if you're really serious to learn, you should stick through till the end. If you can't stick through with this video, probably forex is not for you, because this is an industry where you're going to have to study a lot, you're going to have to do a lot of dedication, you're going to have to be committed to learning before you even make any money. Just a heads up. All right, so let's get started. Let's not waste too much of our time. So on my screen here, you clearly see that it is a beginner's guide to forex trading. I don't usually do beginner videos, but I'm hyped up for this one. I like this one. You know, I do a lot of advanced teachings and stuff, but you guys have not gotten to see this part of me. I'm going to be covering a whole lot of things, right? These are the things I'm going to be covering, what forex trading is all about, how long it's been around, and all and all and all. But from the very beginning, what is forex? It's as simple as foreign exchange. Like when you hear forex, let me get a pen. Let's get started syrup. So when you hear forex, it is foreign exchange. Makes sense? But that doesn't define what it is for you, if we're being honest, right? So basically, it is the exchange of one currency for another. Imagine when traveling from Nigeria to the UK, right? You probably have to change your naira to pounds, isn't it? You're traveling from Nigeria to the US, you have to change your naira to dollar. If you're traveling from one country to another, you have to change that country's currency to the country your country's currency to the country you're going to, isn't it? Now, this is how forex works. Having that, oh, it's just currency exchange, doesn't sound like something that people make money off of. But let me tell you where the money is now made. So, assuming you're going for a 2-week stay in the UK and you purchase pound. So let's say, okay, so we have pound here and we have dollar here. We have pound here and we have naira here. So let's say when you changed your naira for pound, you did £1, right, for 1,000, I think, yeah, 2k. Well, let's say you do £1 for 1,500 naira. Stay with me, okay? When you traveled 2 weeks later, you came back, and when you came back, you wanted to change your pound back to naira, and it happened that £1 was now selling for 2,000 naira. 2 weeks later, you just made, if you sell, you just made 500 naira profit for 1 unit of the pound. What are we trying to say here? What we're trying to say here is that if you came back to Nigeria with 20, or let's say £200, you're basically making 200 times 500 naira difference, right? 200 times 500 naira difference. So we're talking about like talking about 5 times to 10, that's about 10 0 0 0 0, that's like 100,000 naira, right? You just made 100,000 naira from staying 2 weeks in the UK. Let's now assume you didn't go to the UK, you stay back in Nigeria, but you did the transaction, you exchanged naira for pound, but just holding that pound, physical pound. Guys, let me show what I'm trying to say. We're just holding physical cash like this. I don't know if you guys can see this. So imagine we're just holding physical cash like this. I'm walking away with extra money when I change this back to naira. You know what I'm saying? So it's a typical example. Imagine you didn't travel at all and you stayed back in your hometown, and after holding on to this money for like 2 weeks, you make money. That's similar to what we do in trading, right? It's similar to what we do in trading. But in trading, we don't do this physically. In trading, we do it on our phones and our laptops or computers, right? So we're doing it digitally instead of going to exchange the physical money. That's just the entirety of what forex trading is all about, and that is also how we make money trading forex. Okay, so That's that. And then the question that will come into your mind is this forex, is this something anybody and everybody can do? Right? Is this something, can I do it? Who is there anybody that's qualified? Is there like a qualification for who should be in the trading space or who should not be in the trading space? Well, me personally, I will just easily tell you, oh, anybody can trade forex. There's no qualification. There's no. I think once you're above 18, you can get involved. Even if you're below 18, you could use like your parents' ID and all of those to get involved in the market. That's on the side. But in the real sense of it, who are the people that should actually be trading forex? Now, it is important. Remember in the beginning, I told you guys that there are people who come into this trading space and they don't make it. Like you just come and you ruin your life. And it's for one reason. Those people are chasing something. They want quick money and they're not patient. So trading is not for people who are not patient. If you can't be patient, if you can't stick to process, if you just cannot dedicate your time to getting good at something, because I think that's generally the recipe for wealth. Get good at, get extremely good at something, and you make money, right? So if you can't devote that time to getting good at trading, like the way I'm teaching these things, I'm teaching you now, it's come from the abundance of my knowledge, right? From a wealth of knowledge. Because of I've done my due diligence, I've burnt years learning this craft and getting good at it. Excuse me. So it's easy for me to give out. It's easy for me to explain it to you because of, I'm good at it. Imagine I was not good at it. I would not be in a position to be teaching you, right? So trading is for people who can be disciplined and like you can just be committed long term. So long as you can be disciplined and you can be committed to learning, committed to growing and evolving, you're not egotistical. If you make mistakes, accept your mistakes, learn and evolve. This thing, you will kill it. You will kill this industry, I tell you. But if you know that deep down you cannot be a committed person, you're not just that type of person, just stay away. Right now, swipe down on the video, click X, and go do something else. How long has Forex been around for? Forex has been around for as long as currencies existed, as long as countries had currencies, as long as there was naira, as long as there was dollar, foreign exchange existed. We had always had Forex. But the only thing is that it's around 1990s. Okay, look at what we said here. It's like the modern one that we know now, the modern one where we trade digitally came around late 1990s, where internet was now available. So it now made it possible for you and I and every other person to be able to trade from the comfort of wherever internet is. Because as at 1990s, I'm not sure everybody had internet in their homes, right? But as of today, from wherever you have Wi-Fi or a stable internet connection, you can trade and you can make money, right? So that's that. Moving on to that, we go to the next thing which we have here, and I think is asset classes. I don't know why I'm a bit skeptical to teaching what's here, but I'm happy to at the same time. Anyway, asset classes. So in trading, right, you can trade different things. Currency is just a branch or a popular one. Let me give you an instance. Those trading in the real life, like not forex trading now, traders like in the markets, in our regular markets. A trader is a trader defined to just one thing. No, a trader is a person who buys goods to sell, right? Whoever buys goods to sell is a trader. I'm talking of the petty trader, the foodstuffs traders, the whatever traders that we find in the markets, right? The pepper sellers, the yam sellers, the rice sellers, they're all traders, but they have different things that they specialize in, right? Some people are selling pepper, some people are selling onions, some people are selling rice, some people are selling yam, some people are selling provisions, but they're all traders, right? They're all traders, they're all business people. Same thing with our digital trading space. But here we are not just trading, we're financial traders, right? We are dealing with bread, we're dealing with money. So here too we can trade different things, right? But these things that were traded in collection, collectively, they are called asset classes, but everybody calls it forex, because it's just very popular. Forex is just one branch, which is currency. Remember, I told you that forex trading is foreign exchange, and it means exchanging one currency for another currency, right? And then a lot of people saw it that way, and a lot of people just decided to jump into forex, whereby they are trading currencies, which is not like there's nothing wrong with it, right? It's just very popular, and then it makes other ones less popular. But nowadays, you see a lot of traders, especially in Nigeria, dive or deviate into trading commodities, but they don't call it commodities. They're still calling it forex. They're trading gold and they're still calling it forex. Well, gold is not a currency, right? That's on the side. So let's explain. We have some asset classes, and some are currencies, and then you see the likes of Euro USD, GBP USD, and other pairs, right? You have commodities, right? You have stocks, you have indices. Commodities, the likes of gold, oil, commodities, gold, silver, oil, physical commodities, stocks, Tesla, Apple, Google, Microsoft, all those stocks, yes, they are traded. Everything we are trading the financial market. We are financial market traders. And in the financial market, there are different branches, right? Different classes of assets that are traded. If you have, why is it called assets? So you're not just cramming the vocabulary. If I have gold, what do I have? It's an asset, it's appreciable, right? If I have silver, what do I have? I have an asset. If I have oil, I have an asset because it's obviously going to be going up. It could go down, but it could be going up more often. If I have stocks, I have an asset, right? So that's why we call it assets class. If I'm just like this dollar, right? This dollar I have here is an asset. This thing could go up tomorrow or fall tomorrow, right? We don't know. Do you understand what I'm saying? So everything that we're doing in the market is all assets. Now, when we collectively bring them together, we're calling them asset classes. So you could ask me, oh, asset class, what asset class do you trade? What asset class do you trade? What asset class do you trade? We're talking of what branch do you specialize in? Do you understand? So the likes of indices is like a collection of stocks, US based stocks. So it's just like this. We have Tesla, Apple. A stock trader is just trading only Tesla or only Apple at a given time. But an index trader, just like indices in mathematics, is like collecting 30 together, 100 together, and then trading them as a derivative. I don't want to make it complex for you, please. But it's just like a collection of stocks. Do you understand? That's what indices are. Don't confuse yourself with it. But these are the few ones. We have other asset classes like futures and co. But these are like the common ones. So we come into candlesticks and anatomy. We're getting serious. We're stepping up the game now, little by little. So candlesticks and anatomy. What are candlesticks? You might not have heard this before, you might have heard this before. But what really are candlesticks? I'm going to pop up my chart and show you right now. So this is a trading view chart, right? This is what you see. When you hop on the market, oh, yours might not look like this. Let me show you what yours will look like. So we're going to apply defaults. So you now, as a total beginner, when you hop on the software, I'll give you the software later, the website later, right? This is what you're going to be seeing. But I don't like this at all. It doesn't work for me, right? The reason why we could ask in the comments and I'll answer why the red and green doesn't work for me. But this is what you're going to be seeing. This thing you're seeing, the major things you're seeing on your charts, this whole thing, let me circle it out so you see. All these things you're seeing, right, are called candlesticks. They are they're like bar graphs. They're giving us an information, a very important one at that. But before I go back to the whiteboard, I need to change my templates back to what it used to be. All right. Pardon. Paramount. Good. All right. So let's go back to the whiteboard. So candlesticks are basically what you see when you open any trading platform, any charting platform at all. You will see candlesticks, even if it's your crypto wallets, right? You just do crypto transactions. You go there on the trading part of it, you see candlesticks there, right? They give us four key information. Every candle gives us an information on where price opened, where it closed. So it gives us where price opened, where it closed, the highest point it got to at a particular time, right, and the lowest point. So I'll show you something. You see this chart you see here is a graph. Just like in physics, in maths, in statistics, we always had what? Graphs. It could be a bar graph we have back then, right? Back then we could have a bar graph, we could have a line charts, we could have so many things, right? But this was statistics then, back in the days. And even in physics, we'd have to plot a graph. In economics, so many things we were learning back then in secondary school, we had graphs. This forex that we're doing is the same thing, no? It's just inverted. So usually most of our graphs back then in school were L graphs, but with trading we have an inverted L graph. And this inverted L graph is what you see here. It's like here and here. So there's information down below here. Look where my cursor is, and there's also something up here, right? Up here we have necessary and important information, and down below I just realized I was talking to this mic and I was far away. Hopefully my voice is being picked. So up here and down here, it's an inverted L graph. So what we usually have here is this gives us price. So we call this the price axis, and this gives us dates and time. Date and time, right? Pardon my writing. It's very beautiful, I know. So we have price on the vertical and time on the horizontal, and then candlesticks now come in to help us plot what time and price were we trading at that given time. So whatever you see there is a candlestick. Let's go back. Now, do you see this thing on my chart? Let me show you something. Okay. Do you see this cross that's moving on my chart right now? Right? Check, think about it in terms of what we used to do on charts. When we are plotting charts, we come to a point where X and Y meet, right? Like X will meet and Y will meet, something like this. Something like this. We'll plot this from here, right? Let me make that a little thicker so you can see it. For those of you watching this video from your phones, and then we'll also plot from here, right? Back then, and then we'll mark this point. We'll mark this point as where we plot our graphs from. That's the exact same thing happening in the market too with candles. That is the exact same thing with these candles. These candles are plotted on the cross, like price and time, right? So you see this cross now, if I take it there, it's telling me something. So I'll give you how to read the information. So I want your eyes to go down here. Look at where this black thing under moving. Probably when my editor is editing this thing, he'll show you this black thing under. That's where I want your eyes to be, and then on the vertical too as well. So if I take my crosshair tool and place it there, it's giving me one information. It's telling me that on Thursday, 5th of March 2026 at exactly 6 p.m. I think that's AM. Is it exactly at exactly 6 a.m. price will be trading at, or price traded at 49,791 US dollars. That's what that information simply means, and that's exactly what these candles give us. But that's too much talk. Let me just explain how to read these candles better. Let me explain how to read these candles better for you. All right, so let's take off all this plenty talk, and I just hope I'm not being too advanced. Please, if I'm being too advanced, let me know in the comments. I'll be more than happy to do a follow-up video. Right? So let's go. Anatomy of candlesticks. My goal here is help you know how to read candlesticks. So whenever I come to the chart and see stuff like this, can you be able to tell what's going on? That's what I want. So I took out two candles and I labeled them for you. So remember I was telling you something initially, and I said that a candle gives us four key information: where price opened, where it closed, the highest points at a certain time, and as well as the lowest point. Now, if you look at any given candle, the top of it is the highest point, the bottom is the lowest point. Any candle at all, the top is high, the bottom is low, right? The top is the high, the bottom is the low. Now, but for these two candles, right? These two candles, one is an up candle, one is a down candle, and open and close differ based on what candle opened or what candle closed. What exact based on what exact candle we are on. What am I trying to say? You have already seen here, you might have known already by virtue of memes, comedy, that charts they go up or they do what? They come down. You either have the market going up or the market coming down, right? And I might have to switch this to the one you'll be seeing on your regular charts. When you start working on the charts, this is what you're going to be seeing. So apparently where you see the green, it just tells you, oh, that candle was going up. It was we call it up closed candle. And when you see the red, it tells you, oh, this candle was going down. It was a down closed candle. So but for me, my green is blue. These ones are going up now are my green. This black are my reds. So my up closed candle, they are called up closed. Let me type it out so you see it. Why is that thing too big? They are called up closed candles, up closed candles, up closed candles, or the inverted down closed candles, down closed candles. Now, whenever anything goes up or anything goes down, there's a common terminology we use in trading to refer to it, and it is bull or bear. No, not even or, and. So I'm going to explain. So bull is usually associated with anything going up, and bear is associated with anything going down. So you could hear traders say we are bullish, we are bearish. Same thing like this. So let me explain. This is why the analogy came into play. Right? This is how the analogy came into play. Let's check if we can see a picture of a bull. So my Google knows I'm a trader and it's already telling me bullish flag pattern. Bull, just a bull, just a bull. Good. So this is a picture of a bull, right? These are all bulls, and they already know that as a trader we have the opposite, which is a bear. So you see a bear and a bull, but let's see if we can get two of them together. Bull and bear, bull and bear. I just want to explain the logic once and for all. Okay, so if you know animals, you know bull and bear, you know that a bull attacks its prey by using its horn, right, to throw them up. Emphasis on throw them up. Hmm? So if a bull throws its prey up, what's happening? Up moves. So when the market is going up, they say the market is bullish. You're being bullish. And a bear attacks its prey by pinning them on the ground. Like, most times it climbs on top of its prey and pins them to the ground or tear their flesh. But everything is done on the ground, which is, where's the ground? The ground is down. So which it signifies or emphasizes downward moves in the market. So that's why we say, oh, it is a bullish candle. Let's go back. It's a bullish candle when it's up close. It's a bearish candle. So let me complete it. Bullish and the other bearish. So you say, oh, it's a bullish candle means it's going up. A bearish candle means it's going down. So bullish up, bearish down. Have that at the back of your mind. Write it down. Possibly write it down. Never forget it in your life. So long as you're taking trading seriously. Okay, so let's go back to candlesticks. So there's something important I need you to know. The market moves from left to right. Let's at all given times. Like, what did I just speak? At all given times. Hey, Jesus Christ. At every given time, the market is moving in this direction. From left to right. It's never going from right to left. It's always moving this way. So when we're seeing these candles, we're telling you that these candles are moving from the left to the right. They are moving always to the right, towards the right hand side, towards the right hand side. That's the first thing you should know about candles and how they behave. They are always moving to the right. Now, second thing you should understand is open and the close. Remember that we just said the high and the low for both candles, and we're seeing every candle has its high. Every candle has its high and its low at the top or the bottom. So this is the low of this candle. Let's do this. Let's do this. We don't need to make it messy. So this is the low here and this is the high. This is the low and this is the high. This is the low and this is the high. This is the low, it doesn't change, and this is the high. This is the low and this is the high. The low and the high. It goes on and on and on and on. For every given candle, this is the low, this is the high, this is the low, this is the high, this is the low, this is the high, the low, the low, the high, the low, the high. I hope we're clear, right? We understand what lows and highs are. Candle highs, candle lows. So if, for example, tomorrow I'm dropping an analysis video on YouTube and I'm telling you, look at that candle's high. Your eyes are looking for highs, top of each candle. When I'm saying look at the candles low, lows of candles. Now let's talk about the one that's a little bit tricky. Open and close of candles. Open and close of candles. These candles you're seeing here, right? These candles you're seeing here. Sorry. Yes, these candles you see here have what they call an open and a close. And although TradingView gives you the digits, right? You see the digits here. TradingView is the website I'm currently on. this trading view, you see here, tradingview.com. I'm going to show you, don't worry. So it gives me the digits. It gives me open, high, low, and close of every given candle. But that's not enough. We need to be able to spot it ourselves too. That helps us with the analysis. So a bullish candle, remember we know a bullish candle now. A bullish candle is a candle that is up closed, a candle that is going up. Right? A bullish candle opens below. You have to pay attention to what I'm saying now. A bullish candle opens below and closes above. We need to switch our color to yellow. Bullish candle opens below and closes above. Why? It's moved like this. We are going up. If you have an up arrow like this, where do we start? Where did this arrow start from? Here. Where did it end? Here. So this arrow started here, ended here. If it's a candle, it started below, ended above. And the opposite, which is a bearish candle, right? It's a downward arrow. I don't even know if this arrow is visible. God help me. It's a downward arrow. And this arrow obviously was started above and ended below. It means price or whatever. Let me not say price. Whatever it is that we're pointing started from this point and ended here. So from distance from here to here is the down move. Same thing in the market. The bullish opened below. This yellow is not yellowing. Let's change colors, please. Let's use green. The bullish opened here, closed here. The bearish does the opposite. Opens above, closes below. Why? Because it is pointing down. And if an arrow is pointing down, where does the arrow start? From the top, ends at the bottom. If an arrow is pointing up, where does it start? From the bottom and ends at the top. I don't know if we're hitting the nail on the head. That's how you know a bullish candle, and that's how you know the open, the high, the low, and the close. OHLC. So you see this OHLC is the same thing TradingView is giving you here. OHLC. I tell you, I'll be very honest with you, it's not important. You see these values, I don't use them. Except like for advanced things, but it's something I can do without. So I don't want you to confuse yourself. I don't want you to feel overwhelmed that, oh, I'm dropping some heavy things. Trading, let me tell you something. Trading is best done with simplicity. If you're making things complicated for yourself, this is just in case in the future you don't ever see me again after this video. You don't ever learn from me, nothing of that sort. Cool. But I'm telling you that you see trading, winners in this game, consistent winners are those who keep it simple. Less is more in this industry. So it's important you know now. And anything that's feeling like it's too complex for you right now, it's just because of it's new. It is not complex. I am not an advocate of making things hard. My trading approach and methodology is simple, and it prints me consistent bread. Right? It has changed my life. I'll tell you for free. But what I'm telling you is that it is simple. So just in case, I don't know why it came to my mind to tell you this, just in case you later progress and you feel like, oh, because of your seeing charts, this thing has to be very difficult, it has to be technical. Please, less is more. The easier it is, the better it is for you to execute that simple thing, right? Just like you're doing a task. If you're doing a task, the ones that are easier, it doesn't stress your mental health to do it. You just think about it, get it done. But those ones that are hard, you have to summon courage, do too much before you do it. Please, trading is a very simple thing, right? So this open, high, low, and close, I'll just give you the basics so you understand vocabulary and the basics of the industry you're getting into. So it's not going to be hard, okay? So open, high, low, and close is basically open, high, low, and close. And TradingView also gives it to you in case for some reason you want to know the price of any candle. So if I place my stuff here, I take my eyes to the open, high, low, and close up there, and I can see it, right? That's that. What again? So let's just do a small test. Is it a test? Exercise, whatever it is. Illustration, it's not even a test, don't worry. So this is what it is, right? If we know now, we've established two things. If we know that a candle, the market rather, moves from the left towards where the right, if it moves from the left towards the right, and bullish candles, which are up close candles, they open below and close above, and then bearish candles open above and close below. How can we tell what price did here? We can easily tell if this candle opened here, that means these candles went this way, or the market, right? The market went this way, came down, moved up, came down, and moved up. Boom. That's it. That's how we're able to read what price just did. Let's go to my charts. I'm sorry, I can't work with this. What's it called, Seth? Where's my template? What's going on? No, what's going on? I can't work with this chart view. Um, so, sorry, I have to get back to what I'm comfortable with. It's not because of I'm teaching people, I'll come and inconvenience my eyes. So you have to like inconvenience your eye for me because I'm the one who has what you I have what you want, right? So you have to stress yourself for me, not the other way around. All right, let's go. So let's start from here. We're starting from here, okay? So we can see clearly that the market went down, it came up, came down, came up, came down a bit, moved up, came down, moved up, came down. Notice something. The blue candles, the up candles are the ones instigating the moves up. The black candles, which are going to be your red candles, are instigating the move down. The blue candles instigating the move up. The black candles instigating the move down, and it goes on and on. And whilst this is happening, we're moving our hand towards the right. So blue candles up, black candles down, blue candles up, black candles down, and it goes on and on and on. That is exactly how to read at least what the candles are telling you in terms of how they move. And I also told you how to read it in terms of price and time, right? So let's see this particular candle. You see this candle I'm on? Let's zoom in a bit. This candle now I am on where my cursor is. If you look to the bottom, it gives you that, oh, that's candle printed on Friday 6th of February 2026 at 6 a.m. And that particular price it was trading at was 49,282.17 US dollars. Easy. That's it. We're done. Candlesticks over. That's it. So let's talk about basic terminologies. These ones are just the ones that make you feel like a trader small. You know, when you're talking about it, someone will know that, oh, okay, this guy knows this thing. Okay, so let's go. So pips. Pips. Think about pips like cents, kobo. Let's say, for example, if you're going to run, they say you should run, right? Run. Each stride, just said the thing, sef. Each move of your leg, if you're running from one point to another, if you're running, it's called a stride. If you're walking, it's called a step. And you now walk. I've walked how many steps? I've walked 1,000 steps. I've walked 2,000 steps. Kobo, cents in dollars. Cents add up, right? They add up to dollars eventually. Kobo adds up to naira eventually. Now, let's look at the explanation we have here. So we said, think about this like cent or kobo. A pip is the smallest change in price. What do I mean? Let's say I have these AirPods, right? And let's say I bought these AirPods to sell them. But I bought this AirPods for like let me give you a random price. Let me say I bought this AirPod for $100. Now I got this AirPods for $100 to sell them, and the cost price was $100, and I'm planning on selling it for 150 or 120. Now imagine saying the price of this thing has moved from $100 to $101. In cents, it has moved 100 cents. 100 cents make a dollar. In cents, it has moved 100 cents, right? But it doesn't really affect me, but I just know that, okay, the price has moved. When I go back to buy, I'll just know that I'm budgeting $101 to buy this airport. Same thing with the market. Same thing with the crate of egg. So if we say price has moved 10 pips, it's saying like the price of this thing has moved 10 cents. The price of this airport have moved 100 cents, which is equivalent to $1, right? So if I'm purchasing to sell again, no problem. I just know that, okay, the price has moved like this. It doesn't hurt me really, because if the cost price adds $1, means my selling price also add $1. You understand? That's just what pips are. They're the smallest unit of movement in price. So if you come to this market, the smallest, and I mean the smallest move, if price moves from like here to here, right? We could calculate this thing. Let's measure it. There's a tool here called measure tool. So we see that I don't know how many it's moving now, but we can measure that thing, and probably it has moved a few pips, a few percentage in points, a few pips, right? That's what that one is. back to the next thing. So the next thing is spreads. Don't confuse yourself with this terminology. Just know them. If you think about pips, think about it as the smallest unit of price movement. Easy. The smallest unit. Think about kobo, cents, kobo and naira, cents and dollar. That's just it. Then for spreads is pretty straightforward though. But let me see the analogy I have here. So I'll give you my own personal analogy. So the analogy I have here says it's simply difference between the buy and the sell price. Yes, in trading we call this bid and ask, but it's not important. It's not important. I've never, when I'm trading today, I never think about what's the bid price, what's the ask price. In fact, I even pay my liquidity provider, Abi, broker, right? Broker. Don't worry, I'm going to teach you what broker is. Is here. I'm going to teach you what brokers are. Okay, so I've rather pay my brokers more money so that they eliminate the spread for me. So I'm never thinking about it. It's just a knowledge that you should have. Okay. All right. So spreads is simply difference between the buy and the sell price. Imagine the illustration on the analogy we have here is imagine you buy a gold necklace for $100 and you try to sell it back to the same jeweler 5 seconds later. They might only offer you $95. That $5 difference is the spread. Have you guys ever bought something? And the popular one is a device, a phone. Have you bought a device from a phone? Is it phone dealer? It's not phone dealer they call them. I don't know, but you know what I'm talking about, right? A gadget store, a gadget dealer. You buy something from a gadget dealer, and let's say it's an iPhone, and they tell you the iPhone is $1,000. $1,000. I'm trying to use dollars, so it's gonna be universal for everybody. $1,000, and you purchase it, and that time you just don't want that phone again. Even if it's not that time, even if it's like 3 days later, you come back and you want to sell that phone, they will never give you $1,000. They could tell you that you should give, they'll give you back 900 for the phone. Some wicked ones will even tell you 850, right? But you're like, I just bought this phone, I've not even used it at all. They're like, yes, because they'll have to resell, so they have to make profit. That you see that difference that they're giving you. The most popular is not even the phone. The most popular is with foreign currency. This one happened to me not too long ago. I purchased. I'm in Nigeria, obviously, so I bought some dollars, and of the amount of dollars I want, I was going to send some money to someone in the US. So the exact amount I purchased, it turns out that the cost of the person over there receiving through that payment method we wanted to use was high. And I was like, okay, you know what? I even have dollars in the house. Let's leave this thing. I'll probably use crypto. So I don't need this cash because I don't need the cash. I had cash. But I was just trying to make sure I send that particular amount in Naira so I don't make mistakes. I don't pay more or pay less. So that particular amount I had in Naira, I changed to dollars. So I had dollar cash, right? And that dollar cash, I wanted to pay it into the person's US account, but it didn't work. And okay, now I'm going back to the dealers to sell them back their dollar. Not even sell. I want to just give them, let them give me back the naira I gave them. And then the story changed. But like, oh no, it doesn't work that way. That I have to sell it to them. And if I'm selling it to them, I should know the price. And then the price you're giving me, I'm losing almost 10% on what I have at hand. Rather, not what I have at hand. I'm losing almost 10% of what I initially gave them. Let me give you an instance. So let's say I have 1 million naira, right? I have 1 million, and I used 1 million to buy dollar, and the 1 million came up to $600, for example, came up to $600. Now 1 million was equivalent to $600. Cool, no problem. I go to the bank, I want to pay in the money. They tell me the charges and everything. What's going on? Tell me the charges and everything, and I'm like, oh no, I'm not going to do this anymore. I want to take my $600 back so that they can give me my 1 million. It doesn't work. They tell me no, rather they're going to give me 900,000, and I have to sell to them. Now the difference between this 900,000 and 1 million is spread. That is how they are making their money, right? And in trading too, it's just something that the brokers have set up so they make their money. So it's different between buy price. If I'm buying, there's a price. If I'm selling, that's the price. Do you understand? So it's different between the buy and the sell price. Easy. That's what is called spread. So lot size, very interesting stuff. This one you're going to be using for the rest of your career. As long as you're trading, you're always going to have to use a lot size to enter a trade. A lot size is the number of currency units you buy or sell in one trade. So the analogy is think of an egg carton. Actually, I've been egg crate. Why am I writing carton? Am I in the US? Okay, think about an egg crate. You don't usually buy one egg, right? You usually buy a crate of eggs. And in Nigeria, a crate of eggs is like 30 units. I think so. 30 now. I think it's 30. I'm not sure. I think it's 30. So you think about it. If you're buying, you're usually going to be buying one crate of egg, which is usually 12. In forex, a standard lot is like a crate of eggs, which but our own is not 20 or 30. Our own is 100,000, 100,000 unit of a currency. So one standard lot. But not everybody can obviously afford one standard lot, and not everybody can obviously afford a crate of eggs. Some people want to just buy a few pieces. So there are other levels. But the standard is a crate, right? If you are buying in bulk, they're giving us in crates. You can buy lesser crates if you wish. You can buy what more, but the standard for selling crates in bulk is selling egg in box is crate. Same thing with a lot sizing. Since there are people that obviously can't afford the crates, there are people that can't afford the standard lots. So what do they rather do? They go for maybe a half crate or a quarter crate, which is like mini lots and micro lots. That's the thing. So standard lots 100,000 units, mini lots 10,000 units, micro lots 1,000 units. So a standard lot we just see it as 1.00. You see this? I'll show you when I'm going to teach you how to place a trade. I'll show you where it is. Right, and then mini lots we now turn this to 0.10. Then the micro lot is 0.01. Right, so it's just how it works. It's just how it works. It's nothing complex. It's just, it basically tells you the size of of the trade you're putting on. Is the size, how big is the trade I'm putting on, right? That's that. Up next we have leverage. Leverage in trading is the use of borrowed capital, which we call margin. When I get on the software, I'll show you what it looks like, right? Which is called margin from a broker to control a much larger position in the financial market. Okay, so I think we spoke about financial market earlier, where I was saying financial market includes forex, crypto, stocks, and all and all. Oh, what we are trading is the financial markets, but then we can now branch it down to whatever asset class we're looking at, right? So think of leverage as the broker giving you more buying power than what you, yeah. Think of leverage as the broker giving you more buying power than what you initially deposited. So let me give you a fiscal example so you can understand. So let's think about this. If you want to purchase a house, I know that this doesn't really work well in Nigeria, but it works in better countries, in first world countries. If you want to purchase a house, let's say the cost of the house is $100,000, for example, 100K, right? But this 100K, you don't have it. What you actually have is, let's say, 20K, right? You have 20K, or even 10 sometimes, but you have 20K, and but you actually want this house. Now, if you go to a mortgage bank, you pay the 20K, they complete the payment, right, of the house, giving you access to the house when your money has not actually gotten to that point. Like you don't have 100K, but you have 20K, right? But the mortgage bank aids you, although their own part is that you pay them later, meaning you're owing them. But in trading, you don't owe the broker. How it happens is this. Now, first of all, let me explain to you how we make money on this. So let us say the cost of this house moves from 100K to 110K. What actually happened? There was a 10% increase, right? There was a 10% increase. As there's a 10% increase on the cost of the house, you're only getting a 10% increase on your 20K. So that means your 20K has become 22K. So there's just a 2K increase in your own money. Now, in the cost of the house, now the thing is this: if there's a 20K, listen now, if there's a 20K decline in this house, you are easily going to be wiped out. You're easily going to be wiped out. That's the downside of leverage. So in trading, similar thing happens. But in trading, our broker gives us margin. What they call it is margin. And now what happens is this: it's just like them giving you more money than you have. And this leverage, first of all, is usually expressed in ratios like 1:100, 1:1,000, and so on and so forth. So if you have $100 in your trading account and you have a 1:1,000 leverage, you are trading like someone who has access to $100,000, right? You're trading like someone who has access to 100 times 1,000. That's obviously what, 100,000, right? So, but what happens is this: if you lose, you don't lose this money, you only lose that your 100. But it's just that the rates of you losing this 100 will be faster than regular. Now, why is leverage important? It's something you can do without. Most of us in the start of our journey and our career, we can't do without leverage because the market moves has less than 1% change every day. And if we're trading every day, we need to have a huge sum of money before that change can make sense to us. What do I mean? Imagine the market moves 0.5%, has a 0.5% change, which is less likely, very less likely. Let me look at what change we've had today. Okay, like if you look at see the percent in change, right? This is a percent in change that we're having here, 0.01%. So most times, let's see from this side. Look at this, right? Look at my screen here. We have symbol, last, change, and in percent 0.41, 0.10, 0.25. Do you get what I'm saying? These are like the changes for today. For today, it's like 0.1% change. Now 0.1% increase, 0.1% increase on a $100 account. It's negligible. On $1,000, that's $10. On $100, that's probably that should be like 1 cent, right? 1 cent. That's not what we want to. That's not how much you want to be making. But imagine 0.1 on. Look at this. 0.1 is equal to 1 cent, right? I don't know the symbol for cents. Let's assume that's 1 cent. I don't care. 1 cent, and then you multiply that 1 cent. 1 cent. That's 0.1, right? Times 1,000. Now we're looking at $100. Do you get how much this thing boosts? We're looking at $100 now. It's making more sense. Now imagine you have 10k, 20k to fund your account with. It just allows you make more money. But the only downside is that the speed with which you're using to make money is the same speed with which you used to lose money. Leverage is not something that should confuse you. It's something that you might not actively be thinking about in your trading, to be honest. It's just there and you use it like that. And your trading is with the way we trade, we don't need to be thinking about leverage. Most traders, we don't think about leverage. We just know it's there, and then we have our margin, so we just calculate how much we want to risk on trade, and we're able to place it. Most times, if you don't have leverage, the message you get is not enough money when you're trying to purchase an account. Now, about the losing side of this leverage, how does it work? There's something called margin call. Remember, I said that the leverage is equals leverage with low leverage as margin, right? Margin, which I stated up. Now there's something called margin call. So margin call. What this simply means is it's something that happens. It's not like a physical call, but something that happens when you've used up the amount you've deposited, the broker closes all the trades you have open. So when you're losing, let's say you place a trade, your $100 capital, and your losses are reading, your losses might be reading minus 75, sometimes minus 90, depends on the broker and the leverage you have. But once your margin, I'll show you on the phone, once your margin is less than, I think it's less than 100, once your margin is less than 100, you get a margin call, meaning you've used up all the leverage you have, and then they automatically close your position. Remember that leverage gives you buying power. So if leverage is giving you buying power and you've used up all the buying power you have, what happens? You can no longer be in the market, so the broker closes your position. It's that simple. All right, on to the next. We have trading software and brokers, and I have a feeling to do brokers first. So I know that we're done with this whiteboard before we go to the software. How about we do that? All right, makes sense. All right, so brokers. Who are brokers? Brokers are basically, when I came to trading, I used to think brokers are banks, like they were the forex banks, not actual bank. That's the analogy I used to understand this. I used to tell myself, okay, the brokers are like the forex bank. So this was how I used to tell myself. This is how I made myself understand it. But I'll give you the actual correct way. It's not like I was wrong, but it was just not exactly it. So what I used to tell myself back then is the brokers are like the banks, like our fiscal bank. Because if I have money now, I deposit my money in my bank account, right? And then my bank rather keeps the money for me. And the bank also enables me do transaction, right? If I want to purchase something from you now, I pick up my phone and do a transfer, right? Or I go to the bank and withdraw my money and give it to you, right? They are like that safe place my money is kept, and they also enable me do transactions. I can send and receive money through them. Aside them, they're like the medium, right? Which we used to send and receive money. But with the broker, it was kind of similar, or it used to be kind of similar. Is it used to be? It is kind of similar, but it's not exactly the same thing. So the broker, we don't necessarily send and receive money, right? We purchase, we do like buy and sell. So it's not like the same service here. If not, it would have just been called a bank instead of a broker. So let me explain to you what a broker actually is. A broker is like the middleman that connects you to the market. Let me explain something. I don't know if we had that. I don't know if I spoke somewhere about. I don't think I did. Okay. I'm confusing a session I had with the beginner students. So my mind is here and there. Okay, so look at this. A broker is like a middleman, right? And a middleman basically connects someone who wants something to someone who needs it, or someone who has something to someone who needs it in real life. Think about chain of distribution. We have manufacturer, wholesaler, and retailer, right? Your brokers are the wholesalers. You and I are the retailers. The manufacturers are the markets makers, right? The people who actually are in possession. So we'll use stocks for this example because it's going to be easier, right? So imagine we have the manufacturer being Apple. The manufacturer is Apple. This is going to make it very easy for you. And then this is you here who wants to purchase Apple stock. But you actually don't know how to go to Apple, neither do you even have the capabilities to purchase from Apple. Why? Because Apple will not sell. You can't use your $1,000 and go and buy stocks directly from Apple, right? They won't sell to you because it's just not making any sense. It's just too your purchase is too negligible. You don't qualify. So they might have like a benchmark for people who want to buy directly from them. Do you understand what I'm saying? Now you might need me, right? You might need me, Prince Will, to who buys in bulk from Apple. When I buy in bulk from Apple, you can then buy from me. So there are two things I can do for you. It's either two ways I can serve you. It's either when I'm going to Apple, I tell you, oh, I'm going to buy stock today. Oh. Do you want me to purchase any for you? And you're like, oh yeah, purchase $1,000 worth. I'm like, okay, cool. You give me, I collect your $1,000 and what? Go to Apple and buy. As I'm buying my own, I'm buying for you too, right? That's like a direct link, right? Then the second is I buy and I have it in stock, and you now come and buy for me, right? That's the second way. You come and buy from me. Obviously, I'll make a profit off of what you're buying from me. Cool. That's how our brokers operate. So we can't, you and I can't go to the market. We can't have access directly into the market to purchase anything. Say it's dollar or it's pound or whatever. We can't trade on the centralized exchange because we are trading very small figures. Who are the people that deal with these people? The big banks, right? The big banks, the banks, central banks of top countries, major hedge funds, major private equity companies. These are the people who are dealing with the centralized market, proprietary firms, right? They're having direct access to the market. Why? Because they're having large transactions. But you and I were called retail traders for a reason. We don't have the the capital to actually have direct access to the market. We can't just go to the exchange now and start trading. Why? Because we are trading very negligible amounts to them. So what do we rather do? We need a middleman. That's when the brokers come in play. So the brokers have funds and are able to place our orders on that centralized exchange. I don't know if what I'm saying makes sense. So basically, how it happens is this: most of the brokers, there are two types. They have A booked and B booked. So A booked is a scenario where I say you call me, and as I'm going to buy, I buy for you too. That's A booked. The broker just connects you directly to the market, right? Which a lot of traders, a lot of brokers don't do this, right? They don't do this because they don't really make much money. And most times it's when you have a lot of capital, they do this. When you have good capital, they just connect you because they probably don't have enough money to finance your orders. And then B booked is where they put a lot of, I don't say beginner traders, a lot of retail traders that have small capital. Why? That's how they make more money. So they take your orders and they do it in-house, right? They do it in-house and pay you your profit, right? Do you understand what I'm saying? They don't connect your accounts. That your live account is not connected to the actual market. It's connected to the broker's in-house market. Let's put it like that, right? So it is the same thing, same prices that are already in the market, but the brokers are just doing it in-house because they already have bought multiple of those currencies, so you can trade with them instead of going to the actual market. That's what the brokers do. So it's in another scenario, it's very, very identical. We're almost wrapping, okay? It's very, very identical to your manufacturer, wholesaler, and retailer in real sense. If I have a shop, a small shop down the road, right? I have a small shop down the road, and this is the people producing whatever it is that I sell. So let's say I sell food items, provisions, right? These are people producing the provisions, and then this is the guy who buys from them. Now, most likely, this guy, I mean, color red. Let's change our pen color. Okay, so this guy goes to these guys to buy somewhat bulk amount, and we can't go here. Why? Because we are not buying too much. We're just buying very little. So what makes us feel qualified to go here? And these people most likely not sell to us. They say, oh, we don't sell 2 cartons. We sell 100 cartons, 500 cartons, 1,000, a trailer load. They sell in bulk. So since we don't have the money to buy in bulk, we go to where we can get the little we have or the little we need, right? So that's how the brokers and the broker in the market, that's how they work. So for you and I to trade, we need a broker. We don't have access direct or centralized markets. We need a broker, right? They're the middleman, very, very paramount. We can't skip them. For us to trade, we need a broker. So over to the software. We're coming close to an end. Over to the software we use to trade. Now there are two. There are two major ones. We have MetaTrader 5 and TradingView. Actually, there's MetaTrader 4, but MetaTrader 5 is like the advanced. I use MetaTrader 4 a lot, but there's no point of, because of I don't like some of the updates of MetaTrader 5, but there's no point of holding you guys back from what is advanced. So let me teach you how to use MetaTrader 5, then TradingView. So first, TradingView. TradingView is this thing I'll show you here just not long ago. It's called TradingView, right? And to get it, you just need to come here on any browser. You need to come on any browser whatsoever and type tradingview.com. TradingView, right? Tradingview.com. Boom. That's it. And why I need, oh my god, that because of cookies and whatnot, it's already taking me to my chart. But no, I want to show you how it's done from like the scratch. Good. So you see tradingview.com, this is what you see, right? And when you click launch super charts, two things: either you see launch super charts, or you go to product and you see super charts. But either of these things takes you to the charts. So if I click on launch super charts, then it opens my charts for me. That's exactly how you use TradingView. And then the entire software on its own, let me go through the entire software on its own. I think that's going to be too long, but let's try. So TradingView has a very simple interface, although it looks complex, but it's a very, very simple interface. What we do here is analysis. We come here to analyze charts, right? Well, this is where we say, remember I taught you how candles move, how the market moves from left to the right, and how candles go up and come down, right? So this is where we're doing all those up and down movement analysis. How do we know when price wants to go up? How do we know when it wants to come down? It's here we do all the analysis. And then the other software I told you about, this one, is where we actually go and place the trade. Although if you're in the US and you're using a regulated broker, right, a regulated broker, or you're using a very good broker, you might have your broker on here. Where is it now? There used to be a way. Through which we had. There's a way to connect your brokers here, so you can just trade directly from TradingView, like right here. It's very possible, but I've forgotten how to do it. I don't even do it because the broker I use is not here, so I don't do it at all, right? But there's a way to go about it. So on the left axis, on this axis, all you have are tools, drawing tools, and you just need to practice them and know how to use each and every one of them. You have different drawing tools, multiple drawing tools, right? I've never used this before. Trust me, you don't need to use all of them. Maybe I'll do a separate video doing a breakdown on how to use TradingView, right? All these are tools. This is time frames. On this other side, you have price, and down below you have date and time. This is time frame. This is actual time. Time frame is simple. We've closed this connection. Why? Sorry, they closed that one. So let's come here. Okay, so Oh, I know why they closed it because I opened this one here. Oh. So with the drawing tools, you obviously don't need all of them. Like I have just these ones. These are the ones I use. And of these ones, it's just a few still in here. I don't use every single one of them every day. This is called the path tool. And it's one I use to always show you guys direction, right? And this is called the trend line tool. So we use it to draw straight lines across the chart or slanted lines. We use to draw lines. Let me not say straight lines, but I use it to draw straight lines, right? So on the charts, this is brush. I use this when I'm usually teaching people and I'm trying to bring your attention to something. Then this is a rectangle tool. If I'm trying to draw a rectangle and emphasize on a certain area or a certain level, that's what I use. And text tool, this is what we use to type and write information on the charts. And then there's also another one that's similar to a text tool, but they call it call outs here, right? It's called a call out. We are talking about a particular thing that's happening in a particular area. So we can always call out what's happening here or what's happening there or here, or that's these are like the basic ones I use. So you see all these other ones, like what's that one I drew? I don't know what it's even called. This thing, I don't know how to use it and I've never used it, and I bet you it's not necessary at all. Okay. So all these tools might overwhelm you, but trust me, you just need the simple basic ones. Remember I said something in the beginning. I said that simplicity is key, less is more, right? And over to the other software. The other software is going to be on our phone. So we use one on the laptop and a phone, although TradingView can also be on your phone. So I'll share my phone screen now and show you what the mobile TradingView looks like. Okay, so we need to get it right now. Okay, I can't find where it is. Let's just have it here. TradingView. I barely use this mobile version. Okay, so first of all, I like the fact that I just brought out TR. So after I type TR on my phone, you see the three apps. We've got TradingView up top, MetaTrader 4, and MetaTrader 5, right? So you can see that right there. TradingView, MetaTrader 4, MetaTrader 5. So I'm going to first show you what the mobile version of TradingView looks like. On TradingView, on the PC version, we don't do. I think my app is out of date. I should update, but I don't feel like it. Anyways, I don't have time for that. That tells you I don't even use it. I barely use it. Let's see if they let me open it. So the charts that you just saw now, it's synced, and it's important I let you know whatever you're doing here is going to be here. Whatever you do on your mobile version is going to be on the PC version. If this chart should open now, I doubt it's going to open because we have not updated yet. Okay, let's just update it. Let's just update it. If you update it, I'll show you that whatever you do on here is going to like instantly come to your phone. So you're never left behind. Right? Everything follows you everywhere. So imagine you're on your PC trading and then you need to step out. You just take your phone and go with you. When you go to your phone, when you go wherever it is you're going and you open your phone, it's going to be there. While this thing is updating, I don't know if I should show you. I don't know if I should show you. Okay, so let's do this. We're gonna be having to save time. So remember we spoke about brokers. I'm going to create a fresh Google account and try to open a new brokerage account, so you get to see what the process is like. So first things first, let's open a new Google account, and that would be taking us to, how do they even open a new Google account again? How do they open a new Google account? I Let me see. Yes, beautiful. So it's here. Add another account. This is what we're gonna do. We're gonna have to go to straight up to the broker so we can get them. So the broker I use, one of the brokers I use is XNS, which is like quite reliable, and just I'm not affiliated with them. I don't know if I have a link somewhere. I just put the link if at all. But you can, everybody knows XNS, so you can just type it up there and that's it. XNS. So we're going to click on this is what the platform looks like. Mind you, you can do this on your phone. But since we're still recording our screen on our phone, so let me just show you TradingView quickly. Since TradingView is done, Let's show you trading view quickly. All right, it's updated. This is what it looks like, right? So here I am on NAS 100, right? Look at it right there, NAS 100. So I'll draw something here just to show you how it syncs. I'll draw something here and, a couple things here. I'm on a 15-minute time frame. So I'm going to open NAS 100 on my phone. Do you see those two things I just drew? See them right there, huh? That's how it works. So it's literally the same thing. And if I draw something here, I don't know how fast this one's gonna take to come. Okay, boom, that's come, right? So that's how it works. That's how it works. It's literally synced. So let's go back to the broker we're opening. Broker we are opening. So this is what it is. We just have to click on register here. This website uses a security service to verify. Yes, I am a human being. Do I look like a robot to you guys? Thank you. Thank you. So we're going to be creating an account. I can't remember the last time I did this. So our country of residence is Nigeria. Nigeria is a country of residence. The email address, just copied it. We just created it. So I'm just going to use a password that I know. So you can use any password you want, right? Any password you want. Why do you want to be sending me notifications? What's this? Really? No, this shit has changed. What? What? It has changed so much. This is not what it used to be. I can't. It has changed a lot. Okay, let's find. This is not what it used to be. I promise you guys. I promise you guys. They already created an account for us, and I see it there. I'm even lost. Quite literally. I don't want to trade XNES. Leave me first. I'm teaching people something. Okay. Ah, Jesus Christ. Thank you. So this is what you obviously will see, which I'm very surprised I am seeing this as well. But we can leave this place. This is like the trading area. Although it's nice. I think we should do this someday. Should use this to trade. For what now? MT5 has it finished? Okay. So this is what I'm used to. I'll show you. This is what I'm used to. It's personal area. Right. This is what I'm used to. Alright. So we're gonna hello, fill in your details to make your first deposit. Complete profile and co. So since only putting my email account before, only put my email account wasn't enough. You have to complete your everything, give them your KYC. But I mean, this is beautiful, right? This is beautiful. So since we have this, let's just link an account. So we obviously can't put a real account now because we have to complete profile before we deposit money. Else I'd have shown you guys how to deposit. And if I try to complete the profile and I have to give them an ID, it's obviously going to flag that I'm creating a duplicate account because I have an account with them already. I actually have two accounts with them. Two accounts. Two different accounts. One is mine, one is not mine. Right. This was before, long story. Long story. But yeah, when I started trading with them, I didn't use my details. I used someone else's details, a family member's detail. And then later I now had to use mine. So they already give us an account, which most likely they'll give to every single one of you, since that's like the standard now. So we're going to try to use this on the other software. Remember the other software I spoke to you about? Was it MetaTrader 5? So we're going to try to log in this account on that software. So let's go. Let me share my screen again. And let's get it going. So we have my screen, obviously should be visible by now. MetaTrader 5 is open. Right, this is what you're gonna see when you get to MetaTrader 5, especially on the settings icon. Because I don't have any accounts on this. So this is what you're gonna do. You would click on, you're looking for something, you're looking for trading information. Okay, it's here already. We don't need to click on anything. So you look at all these things you see down here. This is what we're going to use to log in on the phone. So let's go. MT5 login, MetaTrader 5. Right? How do you know? It is always going to tell you you are using a MetaTrader 5 account. If it's MetaTrader 4, it's MetaTrader 4. So when you see MetaTrader 5, you go to MetaTrader 5 on your phone, right? And do what? And sign in on the account. So over here where I have new accounts, I'll click on that. And since I've been using XNES before, you see XNES Technologies come. So click on XNES Technologies Limited. And previously I used a real account, right? So we're going to have to change that to a demo. It's going to be MT5 trial 9. So we're going to have to scroll till we see MT5 trial 9. Trial 9. Right. Before you could search. That's why I prefer MT4. Sometimes you can search and you just find it, but here we can't search. I can't see trial 9. No. If you guys see it, please. How can you even tell me? Okay, I've seen it. MT5 trial 9. All right, so enter login. Right, we have to just take this login we have here, this one, and enter the login on our phone. So that gives us 298544194. Right, that's it right there. And then the password, okay, I remember the password. So that password you used in creating the account is always going to be your password. Hopefully, boom. And our $10,000 is right here. So you see our $10,000 here, and it's also here. Now over to placing your trade. How do we use this platform? So remember when I was speaking to you about leverage and I said margin, right? So you see free margin here. Under there is $10,000, but when we open a trade, the actual margin comes up. But let me show you how to use this platform in general. So you have all these icons down below. The editor will circle that thing so you get to see it, or so you just indicate. All those icons down below is how you navigate different sections. The section where you log in an account is the settings, right? The settings, under the settings, that's where you log in an account. The next one is history. History shows you all the transactions or the trades that have been going on in the account. And right now, what you can see is that there was an account creation and they put $10,000 in there for us, right? So next up is the trade section. That is where you see your balance, your running trades, and everything, right? That's where you see your balance, running trades, and everything, every other thing inclusive. Now, right after that, we have charts. Ugh. I don't know what kind of charts these are. I don't know what market this is. US dollar, Russian ruble. See how messed up it's looking. So here is where you see charts, right? Under charts is where you see charts. Remember, I told you charts is made up of what? Candlesticks, right? And then for quotes is where you see different asset classes and different markets which are tradable. But for me, I have just basic ones I do, which you see them here, right? You'd even see them on my trading view too. You'd even see them on my trading view as well, on my watch list on trading view. So we have NAS, US 30, and the US 500. So those three I'm going to add here, right? But first of all, I have to delete this. So to delete, I click on the pencil icon and delete all those other ones I have there. I think we can select all of them and delete. So we have one left. This one is not deletable because it's the chart that is ongoing. So we add another. How do we add? We do the edit, search, and we can let me see. Okay, so to add, we just click on the search icon. I think so. So the search icon, let's say we're looking for US 30. That's it right there. So we click on it. Then up next, we look for US 500, and they are all there. They are all down below. So 1, 2, and 3. That's all I do. Right? Cancel. They are here right away. So I can use this. Click on charts, and the chart that opens is the US 30 chart. So we're on the 15 minutes time frame on the US 30. So now I want you to look at something. I want you to look at, hold on. Let me delete this first. All right. So US 30, 15 minutes time frame, and I have here too 15 minutes time frame. You see that the charts here, the charts here is the exact same with what you have on my own end, right? So that is how we analyze on trading view and we place a trade on MetaTrader 4. So let's say we want to sell. I don't have any reason to sell. There's no analysis. This is just random. And also I'm seeing the price dropping. So let's assume that drop is going to continue. So let's say we want to sell. How do we do that? We easily come here, right? On the trade area, click on plus, select the market we want. So now I want to sell US 30. I click on US 30. Remember when I spoke to you about lot size, it creates and all of those, right? So I told you something then when I was talking to you about lot size. Let's go back to lot size. And I said, when you're doing lot sizing, where is it? And I said there's standard lot, there's mini lot and micro lot. So standard lot is 1, mini lot 0.1, micro lot 0.01. But we're going to just use one standard lot, right? So 1, and then we sell. That's it. Our sell trade is active. And look at the margin percent we have. Now, margin level in percentage, we have 8,000%. The margin on this account was 10,000, 1 to 1,000, right? 1 to 1,000. So whenever I can keep placing trades, whenever that margin falls below 100, now it's blue, I mean profit. Whenever that margin falls below 100, all my trades will get automatically closed out. And I've just shown you how to open a trade, and to close a trade, I'll open another trade so I can close that one. So sell another one. So I open the second trade on this, right? So look at that trade, the first trade I have. To close it, I simply do what? Swipe to the left, just like this. Swipe, and you see close by market with profit of $13. Boom, I have closed. I go to my history, you see the money I just made, the profit of $13 is there, right? And I have the other one still running, $12 to $13 in profit. So this one now, there's something we can do to this. So we can do modify position. Now let me show you something. We'll go to the charts, right? So I can close this thing automatically. You see SL, close SLTP. Now take profit is an automatic close order. Let's place our take profit there. If the market gets there, it closes for us automatically. If price gets there, if the market doesn't, cool. And it closes for us in profit. That's why it's called take profit. And then another one is stop loss. If the market also gets there, it closes for us in loss automatically. So I just click on modifier. So I have two levels. If price hits either of them, the stop loss and the take profit, you see there, you see it's written there, SL and TP. SL, sell one lot, and TP. So what that information gives us is that I sold one lot of US30 and I'm looking to take profits at 300 points. It's very simple. But I can't wait for the market to hit there because I don't know, I'm not analyzing anything anyways. But I would have loved you guys to see it if it goes there. So you see how this thing closes instantly. Okay, I think it's gonna go there now. Beautiful. Look, our trade should close now. Our trade should close. Boom, it just closed. That's how it works. It's automatic. And when we go to trade history, you just see that we've just made $43 by doing nothing, apparently. Right? But it's not our money. We can't touch it. It's demo money. So that's it. And apparently, I've just walked you guys through everything you need to know to get started with trading. This is all the information you need to kickstart your journey, right? But to actually get your hands dived into trading, you need something called a trading strategy. But this video, I don't want to make this video too long, and this video is getting you informed. The purpose of this video is getting you informed on the basics and how to get you started at least. So you get, now you know the terminologies, now you know the softwares, now you know who a broker is, you know the role of a broker, you know what leverage is, you know everything. What now is remaining for you is the technical aspect of it. And I'm not going to leave you there. So in the past, I've done a video on my channel. I need to find that video, and I'm going to leave the link to that video in the description, but I need to find it and show you just in case we don't leave it in the description. And it is a strategy video. You need a strategy. A strategy is basically what tells you do this, do this, do this. I come in today, I execute this, and I get in on my trade. This is what I need to do to get in on my trade. This is the point where I exit my trade, right? And I'm going to show you just now. Where is it? I've done, so I'm very certain I don't do a lot of those. I know I've done one or two like that. Where is it now? Where is it? Wait, I'm thinking. Is it this one? Let's see. How to build a profit. Okay, I think it's this. Let's see. Let me open it and check.
Meet Kitty the trader. Kitty sees shiny numbers on screen. These numbers go up and down. Kitty wonders, that's a woman's entry confirmation. Sounds simple.
Beautiful. This video, the strategy that shouldn't work but does. So inside this video, I give you a very simple strategy that will teach you exactly what to look out for when you get in the market. Very, very simple. I recommend you watch this video next if you're looking for a strategy that you would use to approach the market. Just in case that one didn't hit home for you. I know I've done one other one in the past, Or you can just scroll through and find it. I know I've done one other one. I can't find it now. Um, yes. So is this old video? Is ICT trading strategy to get beginners funded? Yes, sir. That's it. I did like a year ago. Right. Those two videos will get you what you need in terms of a strategy. All right. So I run a Telegram channel where I drop my trade ideas, the trades I take, the ones I don't take. I drop money mindset and psychology talks inside there. The access to this channel is completely free. The link to join will be in the description. Until next time, be safe.